Alright, hi guys. Welcome back to another walkthrough video. This one is on the purchase of a business. Cool, so this is part 3 in the exam, and this is looking at the business that you're thinking about buying and you're trying to evaluate whether it's a good or bad business, and trying to figure out what to do. So this is one of the last modules in Canvas, and there are 4 steps. So we will work through the 4 steps. I'll do it on screen. I've got an example one here, and I've got a template that you will find in the exam. So in the exam in part 3, there will be a template that will look like this on the right hand side. So you will get this template. Please do also read the question, because that does have a few prompts as well. But that's the template for step 1, for step 2, step 3, and then step 4 here. Now note that if this is on Canvas, so you will have to copy and paste these templates into the answer boxes. So do have a go at that. There's 2 practice exams there that you can have a go. Right, so what I'm going to do in this one is I'm just going to show you how to walk through, how to do the calculations, how to see whether a business is worthwhile buying or not, and the decisions to make. Okay, so we've got this little thing here. Right, we've got a business purchase here. What we have is read the advertisement, and this has some details. So it's got here suburban bar, channels of highest quality, 20,000 a week turnover. So turnover is the same as sales. Ideal for hospitality professional. Asking price to buy it is 480,000 plus stock. Okay, after that we're given some figures. Now you'll find there 5 of the figures, they relate to expenses. So 5 of them are expenses. They are wages, cost of sales, overheads, power, and rent. So you will use those in step 1. And then 2 of the items, they are stock and equipment. So they are for calculating goodwill. And you'll be using those in step 2. Then we've also got what the owner would normally earn. That's $50,000, and that will be used in step 3 to calculate super profit. Okay, so here is your layout of the income statement. You can put your workings somewhere else if you want to, and just put the raw figures, but I'll just put the calculations here so you can follow what the thinkings are. Okay, so we've got some sales. That's our revenue. Then 20,000. Now it's per week. So there are actually 52 weeks in a year. So you need to times it by 52. So that is a little over $1 million. Now you've got 2 columns there. Left-hand column is for the items. Right-hand column is for the totals. So total revenue is there. Now, because we've calculated the total sales for 1 year, that's 12 months, 52 weeks, we can now start using some of these percentages to calculate our figures. And the first one is cost of sales. So cost of sales, and here's the calculation. So our total sales times 0.35. So that is 35%. So 364,000. So that is the cost of sales. That's the cost of restocking all the beer and food, things like that are served. Right, which gives us gross profit. Now, it's got revenue less cost of sales is gross profit. So it's this number minus this number is our gross profit figure. So in this case, it's 676,000. Okay. Now we want to plug in the other expenses. So these are the other costs that are related to the business, not cost of sales. So here we go. So we've got wages. Now again, that is based on a percentage of sales, and that is 45. So 45%. So if you do the calculation, it's that. Note that I'm using the left-hand column because we're going to add these all up. So we've got some overheads. Again, this is based on sales, but it's only 0.1, so that's easy because we just lose a 0. Right, then we have power. Now note that this is per month, not per week. So there are only 12 months in a year, so times by 12. So 12,600 for the year. And finally, we have rent. Oh, so that rent is $7.50 per week. Pardon me. That's 39,000. Okay. Now, if you want to delete a few lines, things like that, you can. You've got those tools in Canvas. But you want to total up these items. So we have 623, 600 of other expenses. Okay, final step is our gross profit minus our other expenses gives us our net profit. So this number here minus this number here gives us our net profit. And in this case, it is a measly 52,400. Okay, so that is an income statement. That is about half of the marks of this part. So, you can just use the template and build an income statement pretty easily. Okay, now we get on to step 2, which is to calculate goodwill. Okay, so step 2 is here. So this is the goodwill calculation. So first of all, to calculate goodwill, you need to find out, well, what's the total asking price minus what assets do you get for that, and the extra that you have to pay is called goodwill. So go back to the advertisement, have a look, and here we go. We've got the price is 480,000 plus stock. So I can put in here that they're asking 480,000 plus our stock figure. So stock, that's the amount of inventory on hand. So that's 40,000. So that is the actual amount that you have to come up with, 520,000, to buy this business. Okay, second part is, well, for that money, we do actually get to own a few things. And the things that we own are these last 2 items on the list. We get to own that stock, the inventory, and we get to own some equipment. 200,000. So that's what, 240,000. Okay. So goodwill is total asking price minus total assets, and so that's 280,000. So that's your goodwill, $280,000. The extra you have to pay for this business because you think that's what the brand and reputation of it is worth. Okay, so now we move on to step 3, and step 3 is calculating super profit. Super profit is the extra reward that the owner is going to get for carrying on this business. Carrying on a business has lots of risks, and these are the extra rewards that they're going to get. So it's calculated. Just have a look at the question. We take our net profit minus owner's earnings equals super profit. So owner's earnings is what they would normally earn. So we're told down here they would normally earn 50,000. Okay, so they'll normally earn 50,000 if they had a risk-free job somewhere, just working at a company. But because they're doing this business, they're going to be earning more. So let's see what it is. So grab the net profit from, you can copy and paste this if you want. This works, there we go. So net profit, income statement, 52,400. Okay, owner's earnings, 50,000. So the extra reward they're going to be receiving is a grand total of 2,400, which, to be fair, isn't very much. Okay, so the super profit is, if you've studied economics, it's like opportunity cost. It's basically the foregone cost. So this is the extra reward for for having done this situation. Okay, the last step is to do the payback period. Now in the exam you will be given two numbers as well, so use these two numbers as for goodwill and super profit. Now the formula isn't given, but it is goodwill divided by super profit. That is the formula. So we take our goodwill from up in step 2, it's 280,000, divided by super profit from step 3, and that will give you a number, in this case 117. Now that's the number of years that it will take to pay back the extra you paid in goodwill. So goodwill is the extra cost, super profit is the extra reward you get. So this is the payback period. So in this case, it's going to take 117 years to repay that goodwill with that amount of super profit, which is ridiculous. Now you want to put here about a sentence or so about, is it a good business to buy, is it a not good business to buy? Not much here. But your general parameters is, if it's less than 3 years, then it's good. It's a good business to buy. Now, if it's greater than 3 years payback period, then you can forget it. It's not a good business to buy. So those are your walkthrough. So that's the walkthrough of buying a business. So when you get to the end of it, you'll come out and you'll have a number, and that's the payback period, and you can evaluate just based on that number. Now we said it in class, this is only one of many different valuation methods for businesses. There's a lot of other valuation methods that could be used. So it's just one. So, but I hope it gets you thinking about what businesses are good, what businesses are not so good. All right. So that's part 3 of the exam. Have a walk through. Also, do use your little blue books that you've got, or you can get it on Canvas, or the numbers are still there as well. And go to the back part where it has purchasing a business. There's lots of scenarios there, as well as the practice exam that I've given. Okay, thank you guys, and hope this has been helpful.